How's it going, guys? Welcome back to another video, and today what I'm going to be doing is I'm going to be going over again market structure. I'm going to go a little bit more in depth and just try and clear a few questions up that I had on my previous video and that I had from people messaging me on Instagram and things like that. So what you want to do with market structure is you want to keep it as mechanical as possible. You want to keep it as consistent as possible, and that's where rules come in when it comes to pullbacks, breaks of structure and things like that. Because the more you are consistent with your structure, the more consistent your results will be overall within trading. So what I'm going to do first is I'm going to show you the rules that I use for market structure myself. This is tried, tested and proven. This is something I've used for a couple of years now. It's something that I've proven to work quite well for myself. You can go on your own charts, you can test out these rules, and you can go through and just see if this type of way of mapping structure does work for yourself. So first of all, what you'll see is the daily, and on the daily we need to see a 100 pip or more pullback in order to deem that a swing pullback. On the 4 hour you are looking for 40 pips or more. On the 15 minute you are also looking for 15 pips or more. So what I also look at now is, previously I did look at 2 candles, but what I found works a little bit better is if it's at least 3 candles or more if you are looking at a true swing pullback. So that's one rule that I've added and just slightly changed a little bit. So you can add this yourself. You can stick to the 2 candle rule that I had in my previous video, but for now I will be using 3 candles or more personally. And the next rule is, how do I deem a break of structure? So how I deem a break of structure is with a candle body close. For example, if you just get a wick through the swing high or the swing low, for me that's personally not a true break of structure, and what that can often be is it could be a liquidity grab. You will then see price come higher before it then makes a true break of structure to the downside or the upside, depending whether you are in a bullish or bearish trend. So the next rule we have on screen here is, where is the swing high or the swing low when it comes to a break of structure? So for example, if we are in a bearish trend, the swing high will be the highest point before the break of structure to the downside. So what you want to do is you want to identify the highest point before the break of structure, and that's where your swing high will be. The same rules apply for if you are in a bullish trend, and overall these are the rules that I use, and this is how simple and mechanical I keep it when I'm marking my market structure. So what I'm going to do now is I'm just going to delete this and we'll go through some examples, and I'll try and go through slowly and just explain where my swing highs are, where my swing lows are, where my true breaks of structure are and things like that, and I'll just try and drive it home, and you can go onto your charts then and you can test this out for yourself. So coming onto the charts now, if we just scroll down, so what I'll do is I'll just look at price from say around here, let's say, disregard all of this price action to the left, because that doesn't really make any difference for what we're going to do today. Is I'm just going to show you purely how you can mark out your structure. So what we'll do is we'll start off right here. So what you want to do first of all, obviously when you come into your charts, you do want to zoom out and just see where you're kind of coming from. Are you in a bearish trend? Are you in a bullish trend? Are you going sideways? Are you ranging? But yeah, overall what I'm going to do now is zoom into this little bit here, and we'll just continue price from here. So what you'll see now is the latest pullback is after this break of structure down here, is the latest pullback is this one. So if you are struggling to deem whether it's a 15 pip pullback, because 15 pips is different depending on how the volume is on that certain day and things like that, and pip count will change over time. So what you want to do is, as you can see, I'm on Euro USD and on the 15-minute chart here, and on the 15-minute, as you would obviously remember from the rules, we do need a 15 pip pullback. So what you can do to measure this is, if you come to the left hand side, click on the measuring tool right here, and you want to measure from the swing low to the highest point, which would be our swing high, and as you can see that is 37.9 pips. So this is a true pullback. So as you can see, where do we get a break of structure? We get a break to the downside and we get a break over here. So this is actually a good example of the the wick break. So if I just zoom in for a second here, as you can see, we've come down, we've had a break with a wick, we've then retraced a little bit, and then we've had a true break of structure with a candle body right here. So at this point here, as you can see, we've only broken with a wick, and until this point here, it's not a true break of structure for me, because what can happen is obviously we could break through with a wick, and then we could just reverse and continue, going upwards. On this example here, we do get a break to the downside. So where is our swing high after this break to the downside right here? So our swing high is the highest point before the break to the downside. So this would be this high right here. So our swing low is now this one. How do we know this is our swing low? We know this is our swing low because we've had a pullback of over 15 pips. And it's over 3 candles. So that is our true swing pullback. If I just zoom out a little bit so you can see price a little bit better. What happens then is we get a break to the downside. So, very simple. Break to the downside. A really nice clean break there. And then as you can see, we do start getting little pullbacks. But this one here specifically is only 2 candles. Then we wick through it. So as you can see on the next example here, we do get a pullback. But again, it's only 2 candles that are above the previous low. So obviously we come down, we break with a wick, and then we get another pullback. What we can do is measure that to see if that's 15 pips and see if it's a true pullback. As you can see, this pullback here is only 10.7 pips. So for me, all this is just one swing leg. And as you can see, we don't get a true break of structure until, over here. If we measure this, and just let's see if this is a true pullback. Measure it from the lowest to the highest point. So for me still, this is not a swing pullback. So where does the swing pullback start? The swing pullback starts from this point right here. So this is our low up to the high, which is 35.7 pips. So this is where you would draw your breakout structure. As you can see, we get a wick through it. It does then reverse tap into our supply zone right here. So as you can see, we get a wick through right here. As I said before, it's a liquidity grab, fueling move to the upside, tapping into the supply zone. And that's when price continues to the downside. So we do get a true breaker structure right here. What happens then? Where is our swing high and our swing low? Our swing high is right here, the highest point. The swing low is then this one, because as you can see, we get a true pullback right there. And what you will notice is all of this price action, if I just go ahead and mark it up, all of this price action is all one leg. You get little pullbacks here, you get a little pullback here, you get a little pullback here. But for me, that's not true. That's not a true pullback. So moving on now, what you'll see is we do get a pullback and we get a break to the upside. So we do break to the upside right here. So once we break to the upside, what you can look for is where do we get our pullback? So some people might be thinking, is this a pullback right here? So is this a pullback? This section right here. So let's just go ahead and let's have a look. So as you can see, the highest point to the lowest point, it is 17.4 pips. But what you will notice is if you just hover over it and then you look in the top left hand side here. So what you'll see in the top left hand side is you'll get the open, the high, the low and the close. So what we need to look at is the highs. So on this candle, we get a high of 1.04792. And on this one here, we get a high of 1.04793. So this does actually break this candle's high. So this is only a 2 candle pullback, which doesn't actually, fit our criteria for a swing pullback. And again, zooming out, the pullback does start at this point right here. But what you'll see then is we do get a reversal and we get a break to the downside. Once we get a break to the downside, this becomes our swing low. Not that. So this becomes our swing low. And where is our swing high? The swing high is the highest point before the break. So as you can see clearly, this is our highest point. So that right now is our swing high. This is our swing low. And if I just, come out a little bit, what you will notice is we are trading between this trading range right here. So what you can do is you can get involved, you can get involved in trades around here. You can also take counter trend trades up into supply zones, around this section. And then obviously what you will notice is this low right here is a weak low, because what happens is it fails to put in a new high. So this low becomes targeted, and eventually, if you're taking trades from around here, what you can then expect is you can expect price to come down and take out this swing low at some point. So you can hold trades from, somewhere up here in order to take out this weak M15 swing low. So that's one thing that you can keep in mind. I've got videos about weak and strong highs and lows on the channel. So if you don't know about that, you can also go ahead, check them out, and you can use that along the line with your market structure. So moving on now, what you'll see is we do get a break to the downside. As you can see, this is a very impulsive break. So, where do we get a pullback? So we'll probably get a pullback around here. It's more than 3 candles, but the question is it 15 pips or more? So measure from the low right to the high, and it's 26.1 pips. So what you'll get is you'll get a break to the downside. So a break to the downside, and then this is our swing low right here for now. This is our swing high, the highest point before the break to the downside, and then moving on in price. So what you'll see is we get a pullback right here, but then we only break with a candle wick. So for me, that's not a true break of structure. So the true break of structure comes all the way over here. So if we just mark this break of structure out, so a break of structure to the downside. So we have a swing low, this would be our swing high, this would be our swing low, this one right here, because it's lower than the actual candle that started the pullback. Then we go ahead, put our swing low there. This is the highest point before the break, so then this would become our swing high. So what you will notice now is we do get a little pullback here, but you can probably tell that this is at 15 pips. And where does a true pullback start? It starts from this candle right here. So if we just measure it out, this is clearly over 15 pips. It's around, it's around 35.2 pips, and then we do continue to break to the downside. So as you can see, we do wick through it here, we wick through it here, we wick through it here, but all this is doing is we are taking liquidity from beneath these lows. We're taking liquidity from beneath these lows here to fuel price up into, supply zones around here, in order for price then to come down and break this this weak 15M swing low. So that's the overall way that I look at market structure. If you are choosing to use this way of market structure, what I would do is I would go into your charts, test this out, see if it resonates with you, see if it works for you. For me personally, it's a really good way, it's a mechanical way, it's something that I can use every day when I come to the charts, and I've got a consistent way now to look at market structure. And like I said before, if you're consistent with your market structure, your trading results overall will be more consistent. So I hope this video provided value, guys. If you have any questions, feel free to leave them in the comment section down below. You can also contact me on Instagram if you want to do that. But without further ado, guys, if you did enjoy today's video, I would appreciate it if you could drop a like. It's free and it only takes 2 seconds to do. And it really helps out the channel, and it really spreads the videos, to be able to help more people. But yeah, with that being said, thank you very much for watching, guys, and I will see you in the next one.